Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon live webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinar shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at the disclaimer. While I welcome Dimitri Pargamonic to the stage, we'll be talking about screening call spreads for competitive markets. Here we go, D. How you doing, buddy?
Good morning, Will. How are you?
Great. Let me bring your screen up.
Yep.
There you
Let
go.
me know if you see it. I'm trying to use a different.
Yep, the landing
function.
page is up right now.
Okay. So, good morning, everyone. What we'll do today is come back to our call spread screener and look for spreads that have competitive markets on the bid and offer on each of the option legs. So let me show you what that looks like. Let's go up to our screeners. Then we're going to go to our bull call spreads. And when we land on this, if you're looking at it for the first time, we see we have all these filters above with tabs. And then below, we have a data table with different combinations of call spreads and related analytics. So you can see here from left to right, we have NVIDIA, stock price, market cap. This is the particular call spread, November 21st, buying the 225, 230 call spread, because we're right now looking at debit spreads or bullish spreads. And then we have these other related analytics to help us evaluate all these different combinations of call spreads. But what we'll do today is look for spreads where we see some option volume and where the bids and offers appear to be squeezing in or competitive on both sides, buyers and sellers, where there's interest, from market participants, and they're indicating that they're willing to negotiate for better prices. Displaying those indications, and what that does is it offers an opportunity for people looking for spreads to perhaps get better executions or values on hopefully both or one of the option legs. So what I'm going to do first is let's expand the spreads that we're looking at. Here it's defaulted to the next monthly, but I'm going to click on this and we're going to look at expirations that expire within the next 30 days. And what this will do is bring back even more potential spreads to analyze. Now we have 107,000 different call spreads to analyze, a bunch in NVIDIA and so forth. You could tab through it, but we're going to start narrowing them down. And I'm going to go to this tab over here, volume analysis. And in this volume analysis, we have the spread, repeat the spread over here, November 28th, buying the 255, 260 call spread. Here's November 28th, 250, 255, all these different combinations. And then we have some information and data about each of these legs. So here we see the volume on the buy strike, open interest on the buy strike, sell volume on the sell strike, open interest on the sell strike. And then next to it, we have what we call these market leans, okay, IV leans. And this looks for markets where there's an indication that the spreads have tightened up on the bids and offers, okay, either on the buy side, because you could tighten it up. For example, you have a market where, a call is $1 bid offered at $1.20. Well, if somebody puts in a limit order for $1.05, now the market tightened up. Right now, all of a sudden there's the bid increased, the offer stayed the same. So now the market is tightened up. It could happen on the sell side, or it could happen on both sides. You could have the bidders step up from $1 to $1.05, and the ask side go from $1.20 to $1.15. So what happens is now both sides indicated they're willing to trade, at this particular option and for better prices than the original market makers were displaying, and that could create an opportunity, to trade in between or closer to the offer, closer to the bid. So what we're going to do is look for options that have a lean on both the buy option, because we have two strikes, we have two options. So we have one option we're buying, one option we're selling to create a spread. So we're going to first look at the buy call, and we're going to come up here, look at the buy strike, and we're going to drop this down, and we can look for options that show a bid lean. Remember, we talked about it where the market tightened up on a bid, the ask, or both, right? So I'm going to click on both here. So this will go and show us from the buy, on the buy strike, where now there is a lean on both sides. And at the same time, let's now go and look at the sell option, right? Because we're looking at two options. And let's look at scan for that part also has a lean on both. Okay, so we're going to go to the strike IV and click on this. I'm going to say, okay, I want to see both. So now we're looking for competitive markets really in both sides of the bids and offers. Okay. I'm going to just sort this really quick by volume just to see if anything is actually trading in these spreads. And then we'll take a look at it. So this is low. So let me take a look at any big spreads perhaps trading. Okay, so this particular stock, it did have some trading activity actually in the spread in this November 21st, 75.80. But let's take a look at it just so you guys get a feel for what that looks like, right? So here in IONQ, right, there's this November 21st expiration, and this little E saying that it's going to cover earnings, right? As I'm hovering over it, next earnings November 5th. And what this is saying is if we're looking at the 75.80 call spread, right there, that each of these legs appears to have competitive markets on both sides relative, it's on a relative basis. Sometimes you have options that are penny wide, they're already competitive, but you could have other wider ones. But these are shown that there's competitive markets in both of these options, and there was already trading activity in here because you could see each of these options, there was actually a spread in here that traded. So I'm going to go click on this and navigate to the options chain. We're going to take a look at that. Okay, so I'm going to click on this, and let me know if it goes to the options chain because I'm using a different share screen feature. Will, are you there? Okay, I think we lost Will.
AD, sorry about that. It was having some tech issues. Apologize about that. Great show as always, D. I'm glad it worked out.
Wait, Will, I didn't end the show. I just wanted to see if you see the options chain.
Yeah, I do see the options chain for IONQ. Is everyone else frozen? I was frozen.
Okay.
Nope, everyone else is good, D. It's good.
Okay. So So now let's take a look. We're on the options chain. I'm gonna just click on this to close or minimize the menu to expand our screen. And here's the call spread we're looking at. So it just kind of pre-populated the spread for us. The November 21st 75 call and the November 21st 80 call. Right. So I'm going to go here, and you could see here the 75 call. Right, this is the 75 call, 298 bid, 340, and these implied vols tell us that it kind of got squeezed in. And then here's the 80, 225, 242. So let me show you. I'm going to drop this down really quickly just to show you the spread IV lead. So first, the 75 call, you could see that the spread is 42 cents, right? The difference between 298 and 42. But you could see that that is tighter than the surrounding. The strike below 60 cents wide, the strike above is $1.97. So this is indicating, well, there is a tighter market. Something's going on there. Why is this market seem tighter? That there are bids and offers that are squeezing in this option relative to the one surrounding. Which way is it leaning? On the buy, sell, or both? So here it says, well, here the bid side is an implied volatility 114.5 IV bid. This is the IV which is greater than the implied volatility below and above. All right, so this looks on a relative basis where it's bidding higher, right, than the options right around it. And this one is offered lower than the options around it. So on an implied volatility basis, on a relative basis, this is a tighter market, right? It's shown as this is a tighter market. Again, that's an indication where there's participants on both sides indicating that they're willing to trade at better prices. Okay. Same thing here on the 80 call. See, this is 17 cents wide, 225, 242. Now, that could still be a wide market. It's still 17 cents is a wide market, but we're looking at in this particular security that's tighter than the surrounding markets, right? So on a relative basis, this is a tighter market. It's not super tight, but it's tighter, more narrow. This one's 42 cents. So for those looking to trade in this particular security or have interest in this security, this offers a better opportunity to look at markets where more competitive, potentially better executions, and better values. And as you can see, there's lots of trading going on in this particular security, in each expiration. So that's just a demonstration of how to narrow down those call spreads to look for more competitive, tighter bid-ask spreads. All right, well, I'm going to throw it back to you.
Yeah, that was very helpful, D. Great tool, great use of the tool. Thanks so much, buddy.
All right, thanks everyone for joining. Stay safe out there. I am off tomorrow.
So we'll see everyone on Monday for a live show.
Yep.
All
Thanks,
right,
everyone.
have a good trading day, D, and we'll see you on Monday. Thanks, buddy.
Bye.
Hey everyone, thanks for joining for another Market Chameleon live webinar series. Everyone have a great, safe trading day out there. Chuck, I don't think I got to say good morning to you. Good morning. Hope all is well. I think, Chuck, you may go for surgery this weekend, right? We won't see you tomorrow because it's live, and then you're in on Monday. So good luck to Chuck. Everyone have a safe trading day out there, a great weekend. We will be sending out a pre-recorded webinar tomorrow. Check for that. Typically, the best send-out time is 6 a.m. for whatever reason. You don't have to watch it at 6 a.m., but it will be live. I'll do it at 6:30. So if you want to get on for the chat, actually, you know what? I'll just do it at 9 a.m. so you guys can get on normal time and chat when it's live. So we'll be 9 a.m. tomorrow will be the webinar. Have a great day. Safe trading day today and tomorrow, and we will see you on Monday. Good luck, everyone. Bye.